Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Monday, March 9th, 2026. Well, we had a historical reversal day on both equities and oil, but it begs the question, will there be follow through? Again, my name is Dr. Jeffrey Scott, marketmripro@gmail.com. My Google group is Top Down Trader. This is for educational purposes only. Anything I talk about or recommend should be taken in the spirit of education and non-investment advice. The intent of the video is to demonstrate the tools of top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make, and I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. My Google group is called Top Down Trader. Why would you want to join? It's my only mailing list. I let you know when I post something on YouTube or other sites. I'll give you discounts on my software. You'll get slide decks that I don't share on YouTube, as well as some of the presentations. And I'm a nice guy, and it doesn't cost anything. News and earnings. So I always like to look at where we're at on futures and on the news that came out since the market closed. So let's start with the futures. So there was some interesting news after hours, and we're seeing the futures improving, although right now the Dow's down 60 points. Bitcoin's down 100, is up 185. E-minis, NASDAQs are down about 10. Russell's down about 7 points. I think a lot of this is the fact that oil is down. See where that went. It's down another $10 after hours. And I think some of that is from the Iranians now want to charge a tariff and not blow up tankers. More to follow on that. From an earnings perspective on Monday night, as we're still in the heart of earnings seasons, although most of the ones I worry about have already had their earnings. ZVRA up 20%, LFMD up 9%, RP up 5.9%, HOG up 1.3%, YEX down 4.4%, KC down 2.2%, VOYG down 2.1%, and MTN down 1.4%. So a fair amount of earnings, but no major movers. As it says here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Obviously, the most important news that we're going to get in the markets on Tuesday is what's going on with Iran and what comments our president will make about it. You can see we got NFIB optimism and existing home sales. That's the last easy day of the week, because Wednesday we get CPI, Thursday we get jobless claims, among others, Friday GDP and PCE complex. So there could be some volatility. Right now, the odds of a rate cut anytime soon are probably pretty low. We'll see if the data changes that, which could be supportive of the market. Any information about what I talk about, the different signals I follow, different terminology I use, please feel reach out to me at marketmripro@gmail.com. If you own the program and have some issues with the technology, coding at marketmripro.com. So let's take a look at what we got. Let me close this. Bitcoin was up 1.37 today. It was positive the whole day, finishing in the middle of its range. Look at the NASDAQ. It opened down 0.92, traded as low as 1.4, as high as 1.57. There's a 3% delta in that. And it finished at the high of the session, or just off the highs, 92 percentile. Russell up 1.07. This one even more, over 4% between high and the low. Spiders up 0.88, and the diamonds were up 0.56. Dollar was down, and volatility was down big. What didn't change much, and what causes some hesitation for me and how much follow-through we'll see, is the breadth. You could see new highs minus new lows. We really don't have a lot of new highs. We still got new lows. And net, that means we're negative on the new high minus new lows at 52 weeks on both the NYSE and the NASDAQ. Yes, sectors and industry groups much higher than the prior day, which would have been Friday on all three of the indexes. But look at the number of positives. 49% of the S&P 1500 were up, 51% the NASDAQ, and 49% the NYSE. If we were having a rip-roaring rally, wouldn't you expect more participation? feels more like a dead cat bounce to me than the beginning of something new, although I certainly hope it's the beginning of something new. If we look at what led in the S&P 500 world, technology up 1.8, healthcare up 1.03, nothing else up over 1%. And laggards, financials, big banks fell off again, and energy. If we look at thematic leaders, it was uranium, semiconductors, lithium, clean tech, copper, video games, China, biotech. Seems like all the things that have recently sold off rotated back today. Again, was this a dead cat bounce on some oversold stocks? If we look at the timing model, nothing changed. If we look at the daily model and we just look at the buy-sell line, we remain in a sell on all of the ETFs. Now remember, this is the conviction signal. When they're mixed, I put more weight on the weekly. When they're both going the same way, it's a much more powerful signal. So all four, spiders, Qs, diamonds, Russell, and a sell signal on the daily. And when we look at the weekly, you could see we are still in a sell signal. Now, that said, we had a lot of healing on the price, but we haven't flipped the bongos yet. So it's hard for me to turn bullish on one day, which again, with such little participation, makes me feel like it is very likely a dead cat bounce. But hopefully it's more. I mean, on IBD Live, they called it attempt to rally. According to them, this is day one of a rally attempt. Mike Webster, I believe, talked about his pink rally day and suggested that we could get a follow-through day as soon as today. I don't think we met the volume criteria, but I've been out all night and haven't seen the final data. But from a historical perspective, I don't believe today was a follow-through day. If we look at the major index ETFs, a little bit more detail. There are some cool things here. So, what a big outside bar bullish engulfing pattern on the S&P. Now, seasonality is about to turn positive on all time frames. So maybe we're a couple days early to see a rally from a seasonality perspective as a very bullish candle. That is the good news. This blue dot, forget the color change, it's a green candle low, which means it opened below. It's the lowest open going back, gosh, at least 20 bars, and it closed up on the day. That's a bullish reversal. That's pretty good. What was bad? Well, it doesn't look like volume was massive. 94, 631, 99. So we're not even more than the prior day. And we already showed you the participation was lousy. So we will see if this turns out to be anything. That seasonality to me is a positive. The lack of volume and the lack of participation, a negative. The Qs are living in a box. And we didn't close below the box. We haven't gotten above the box. Now, seasonality is turning up here. So similar to the spiders, we're above the 200, but we're below the 50 and the 100 in a sideways consolidation. If we look at the diamonds, they look like the spiders. We had a big bullish engulfing pattern, but we're stuck between the 100 and the 200. We're going to have to break above that and then above the 21-day, 17, and the 50 at some point for this to be a significant rally. And then lastly, I did want to point out that part of why I was optimistic and why I put a note out on Top Down Trader, we were at minus 100 on the high jump bar on the diamonds on Friday. Let's see what we were on the others. On the Qs, we were at, let's see, only minus 43, so no signal there. And on the spiders, we were, on that day, we were also minus 100. So the spiders and the diamonds were at the worst extension to the downside that we've had in a year. Sometimes that leads to a reversal like we saw today. And lastly, the Russell, another bullish engulfing pattern. This one's even better because it closed above the 100-day. And what was the high jump yesterday? Only minus 55. So volume, let's see, 62, 667 versus 63. So great days on each of the moving averages, big moves, nice closes but on lower volume and not great participation. Sorry, it doesn't overwhelm me to the long side. I can hope, we can hope. Now we would look for that O'Neillian follow-through day, which would be, say, the NASDAQ 125% of the prior day on higher, 1.25% move on higher volume than the prior day. That will get my attention. That shouldn't fire until day 4. If today was day 1, then day 4 is Thursday. If we look at volatility, this is exactly what we wanted to see. And we talked about it over the weekend that, closing at the high suggested we were going to go higher. We opened here, we closed at the bottom of the day. And if we go back and we look, it's kind of reminiscent of what we were seeing in here and here. And now we're going to see if it comes all the way back and gets down to neutral. But that was a reversal. Now, all right, I'm going to do it. The VVIX rather, is the volatility of the VIX. And what I put out on my Stocks and Docs video, and I mentioned in the room today, whenever we get above 140 on the VVIX, it's pretty much a reversal day. And it doesn't happen often. And I'm looking at the last time before this that we closed above it. It goes all the way back here in 25 in April. And when did we make our call on the low? On this day right here, right in here. So we did trigger that, which I thought was going to be meaningful, and it was. Again, but it doesn't mean we're done. This could be a short-term bounce for all that we know. And if we look at the dollar, broke out above trend line here. Did it from, it must have moved, but I would have thought. Oh, sorry about that. Let me reboot it. Let me pause for a second. All right, let's go back into U.S. indexes. Open up the dollar. Take this out. Probably the best thing to do. And I think what I tried to do was connect the dots here and remark that breaking up here could be meaningful. We're consolidating above the trend lines, above the moving averages, so that's higher. But don't forget where we came from. The dollar's way off of its recent highs. So right now, I'm not worried too much about the dollar. Dollar strength could derail a market recovery. But right now, there's nowhere close. So now we're going to look at gold and silver, both of which are consolidating. Gold, let's open them up big. Gold today was off 0.21, really didn't do much. So we're going in sideways movement in gold, which isn't a big surprise. We're kind of midway between the high and the recent low when we had that 20% correction over just a couple of days. Silver, similar pattern, but it's below the moving averages, though it did break above today. It was up 3%, but again, very much off of its what I would call climax run highs. Oil, wow. Looks like the VIX, doesn't it? Traded up to over $120 a barrel, ended up about $85 a barrel. After hours, it's trading lower again. As I mentioned earlier, the Iranians announced they want a tariff on tankers transiting the Straits of Hormuz, which might be cheaper than the extra insurance cost. Maybe they're capitalist after all. And then if we look at natural gas, it too came off a little bit today. Traded higher, closed right below the 50 until it breaks above the 200 and stays there. I don't pay much attention to it. I guess if I was in Europe where natural gas and liquid gas are much higher, I'd care a lot more. If we look at rates with a strong market, you might expect the rates to go up, and they did a bit, up 0.27. So it's a solid candle, which means it closed at the bottom of the body. It's white, it means it was up prior to the current day. And if we look at the 30-year very quickly, the 30-year failed here at the moving averages again and closed down here. It was down 0.23% at 4.74. Next, we like to look at the buckets. Things may take a few seconds to load since I had to restart the program. pretty snappy. And, if I looked at yesterday's, let's just look back one day, which would have been Friday's. On Friday, I commented about the number of stocks up here over the weekend, meaning these are the number of stocks below the Bollinger Bands. We weren't in a guaranteed reversal area, but we were close, and we expected some kind of a reversal this week. I did not expect it today, so I won't say that I called the bottom there. Still not sure if it's a bottom. And if we look at where we are right now, on the 9th, you could see that this white bar has come down. The gray would have been Friday's, the white is today, but we're still massively shifted to the left with most stocks at the bottom half of their Bollinger Bands. The market breadth tool, looking for any new signals, see a couple different things here tonight. You'll see a big move on the NYSE, trading up today, 0.46%, not able to get above the 50-day moving average, but kind of a hammer-like pattern, opened here, traded much lower, and closed at the highs of the session. That's a big move, to me a positive move. However, the stocks above the moving averages are coming down, and this is a reversal area. This is a reversal area, and we're much closer to a reversal area than not. You could see the new high, new lows, the AD lines are down, and the up-down volume was positive today in the NYSE. And then my favorite little indicator here, the 13-week new high, new low. 1 day ago, it was at 0.20. Today, it closed at 0.13. And I think that's meaningful. And it's still in a could bounce again condition. We look at the NASDAQ, it pulled all the way down to the 200 and touched it. It would be beautiful if that turns out to be long-term support. And like where it closed, much better looking today. If we look down here, we could see a little bit of improvement, but still closer to a low than a high on the stocks above the moving averages. Again, new high, low, negative, but in this case, the AD line was positive, as was the up-down volume, and we're at 0.16 on the 13-week. Real quick look at the ratio charts to see what was working today. You could see materials have come off some, communications drifted down, energy still strong, staples trying to be there, technologies still relatively weak over the longer period of time, industrials have weakened, financials are bad, real estate looks like staples, and utilities, the defensive plays, healthcare improving, and discretionary is weak. So still a relative defensive posture. And if we go to the 13-week new high, new low, and others, you could see S&P 500, 1500, the Russell, and the NASDAQ. And my most important thing is to look at this. So the 13-week new high, new low is 0.08. That is getting close to what we saw April 7th last year. So is this the low? It could be. It could be. It looks like it's 0.08 on the S&P 1500, 0.16 we saw on the NASDAQ, and 0.11 on the Russell. This could be the low today, and we go higher from here. It would certainly fit. I just am bothered by the lack of participation. All right, let's go to the JS layout. And just to review everybody, this is my scanner. My scanner consists of my favorite signals that I look for. And I kind of look for the characteristics that are associated with a stock making a move. And those characteristics are some type of momentum has come in, or some type of a impulse, I call them. So I have a number of those that are ranked here under up or down. So if we look at something like XENE, you can see a whole line of those impulses in a massive day. That looks like a takeout day. So then I would pull up the news here. Why is it up? Here's what biotech does after a good day. So they had positive lines in a phase 3 study for some type of seizures. So that's a big deal. And they're going to have a IP, or secondary offering, which they announced after hours. Of course, if yesterday your stock was in the 40s and today it is 62, you're able to sell a lot of stock at a high price and be less diluted. So that'll probably pull back some. But there are certain characteristics that I look for, and that's what I scan for. And then I have some special scans that find my favorite stocks. I also like to look from a top-down perspective, and we could look at where the leadership was today. And we can go into the top four because those are the ones that work: technology, healthcare, industrials, and utilities. We can then look at percent move on the industry groups that are in those four sectors and take the top 10. 1, 2, 3, 4, 5, 6. Let's just take biotech for good luck. 719 stocks. This is a universe that's a NASDAQ, Amex, and NYSE, $1 and 100,000 shares. And let's filter it for $5 and 500,000 shares minimum. And that leaves us with 397 stocks. And let's rank them by bullish impulses. Let's just take a look at the list. So XENE, we already talked about. UTHR announced a buyback today. This is one of my favorite biotechs. It's an expensive one. What a beautiful breakout. Let's take a look at their technicals here. Earnings are out already, and you could see they had good growth, well above their multiple, and surprise. Revenue growth, but actually a negative surprise. And then if we open up this box, we're going to open up both of these and leave them up on the left and just look at the right side of the chart. What did it say? It's going to present discuss phase 3 results. This is a week ago. I've always been impressed with this company, and look at the move it's had. Is it ready to run again? RLMD, another healthcare stock. I don't know it, so I'm going to highlight it. And it may not have any information. It must be a relatively recent release. Let's look at the weekly. Doesn't look like that recent. Let's look at the monthly. Some of the IPOs are not populated in our database from a fundamental and technical perspective. I'd want to do my research, but big move here. And again, what do you expect after a move like this? You expect it to drift down. RGNX, earnings ugly. Stock moved up. Let's look at the news. Lots of lawyers. That never makes you feel good. And it makes you wonder if there's a buyout of this. All right, now I'm going to give up. I don't buy something with more attorneys than actual stock news. My guess is there's a buyout and people don't like it. VRT is one that I own. And this one, sometimes luck is better than brains. Got added to the S&P 500 after hours on Friday and had a big move. We'll see how long it holds it for. It's got excellent growth rate, great revenue growth rate. It's in the data center space. RNAC. Yeah. And I'll go down through these. PTC. I don't know much about this company, but if you're looking to buy something at a discount, a move off of the 200 is interesting. So I like to look at the leading stocks and the leading industry groups. That's what top-down trading is. I like to look at certain things. I like to look at the moving averages and the stocks in relationship to it. I like to look at my dots, which include that green candle low or red candle high, which are single candle reversals, a wilder PSAR, the squeeze, and then I have momentum, breakout, volume. I'm missing the gap, and then two of my proprietary indicators of CPR and the EMS. I just like this from a pullback. I don't know anything about it, and I'm not recommending it. In fact, I'd be careful going into the market on Tuesday. I'm waiting for that follow-through day. I'm waiting for me not to feel like it's a dead cat bounce. That means volume. That means participation. So I could go down the list. It's late, but I don't think I'm going to find a whole lot that I'm going to tell you to buy there. The other way to look at the markets is from more of a bottoms-up perspective, where I look at the entire market and I look for specific signals. That's the impulse indicator, impulse list. Let's clear my filters. And my favorite is the A+. I've noticed over time, and I've got my proprietary momentum dot there, that when I see stocks that have two of these dots in a row, good things happen. So this is one stock I saw over the weekend, SLDB. And I think I talked about it on the Wealth Charts video, but there was what we call double momentum, relative strength breaking out above the spider, volume breaking out, and now it's starting to get a little bit of extended, but this is not one I'm making up tonight. This is one I talked about over the weekend. You could have gotten it early today and rode up on an 18% gain. The other one we talked about over the weekend, similar story, was Repligen, where a clean-cut breakout from that trend line. Something good must have happened here. Again, it's not about earnings or revenue. It's a biotech, I believe, which means it may not have either of them. And I could look back here and I could see why has it skyrocketed, what's going on. And if I wanted to read the story, I could just double-click on it. And it's going to bring up a browser multiple times because I click on things too many times, but what's going on with the company. All right, so I do like Repligen, or excuse me, Replimune. And what's VMD? I don't know anything about this. It's a lower cost healthcare stock. Actually makes money. What's it do? VMed, durable medical equipment. Okay. And I did like REPL and SLDB. And then the other one of my favorite scans is more of a pullback and an uptrend scan. I call that my A choices. And that's going to give me stocks. Let's look at a couple of them. Regeneron, another great biotech company, has pulled back into the 50. I like buying stocks that have pulled back to the 50 and break out with momentum. It had momentum today, sitting in a squeeze. Relative strength is improving versus the spider. Volume is picking up. It's not extended. So this is one that I will probably be watching tomorrow as well. This is a more expensive. It had to take out that line. STM, ST Microelectronics. And you notice a lot of them have flags. This one broke out probably on earnings back here. Nope, not on earnings. Must have been a story. I don't know this one at all. It's not what I was thinking of. But you could see it's got that momentum. And it's pulled back. Not a squeeze on that one. DYN. Do you notice a theme here? There's a lot of healthcare stocks. So here's one that's pulled back to the 200, broke out so much today, taking out the 50. It's not extended, doesn't make money. Next earnings are not till May, so you don't have to worry about that. Let's look and see if there's any news. Nope, not anything significant in the last period of time. But again, I like stocks that pull back from an uptrend, and now they're breaking out. So you've got a breakout from the trend line, taking out the 50, support off the 200. I've got a squeeze. I got momentum, breakout, and volume. Relative strength breaking out OBV. This might be my favorite of all of them. So I've spent about a half hour. I've reviewed the markets. I'm still nervous. I think that Trump could end this war any day now. He sort of suggested that today. I don't know what the end game is and what victory will require. It probably just requires the right mood. Clearly, we have degraded Iran's military ability. Is that enough? I don't know. Regime change is hard to get, and I'm not going to get more political than that. Bottom line is, I'm not sure today was anything more than a dead cat bounce. I'm looking for that O'Neill follow-through day. I sold some as the market moved up today. It was a great day. I'm sure you had a great day as well. I'm cautious. Take care, everybody.